Hey there, welcome to another episode of Be the Boss of Your Money. This is my live stream podcast. I've got one question for you. If you don't know why the stock market was able to rebound yesterday, turn around Tuesday, today up on a Wednesday, up and nicely today, if you don't know why, then you don't appreciate three things: stimulus, infrastructure spending, and a new COVID vaccine. That's right. We've got a few things to talk about here today on Be the Boss of Your Money. I'm Mitch Goldberg, your host. If you are watching this in the live stream, and if you have any questions, certainly hit me up in the comments. I'd love to answer your questions. I'd love to get into a little bit of back and forth with you. And if you're watching this in the replay, welcome to you as well. Certainly your questions are very important. I would love to hear from you as well. So let's make it a great show. Let's roll the intro. And this is going to be good. All right, welcome back. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. This is my live stream podcast. I love this. I'm having so much fun, and I hope you are too. We've got to talk about what's leading the market now because it has clearly shifted. This is a topic that has been ongoing on this show for almost a year. We have had leadership coming from the stay-at-home, work-from-home stocks, which did particularly well during a quarantine. That gives you Fang plus M, like Facebook, Amazon, Alphabet, Netflix, Google, Microsoft. We could throw in DocuSign and Zoom and so many other names, so many other great companies. But I said we're going to eventually see a shift when the economy starts to reopen. The only thing I think I'm wrong about is that the shift is coming earlier than expected. We've already been shifting, though, talking about stocks. I've been saying it's time to shift. Make sure you have diversification. You have cyclicals. You have economically sensitive stocks, energy, financials. Diversification, by the way, it's a strategy that we use to reduce risk, not maximize return, because you don't want your overall portfolio to reflect the worst performing investment in your account. And it doesn't necessarily protect your account from going down in a generally down market, which we saw the last couple of days, but it still helps, and it can help you recover quicker, and it can help you make sure you're in the right places. So the right places. Look, I talked a lot about how energy, financials would be a place to be. I know. I'm like, I said this, I said that. Okay, I'm sorry. That's not what the show is about. The point is, the cyclicals are outperforming. The reflation trade is not only intact, but durable, believable. It's become the accepted, anointed strategy now. Not just keep pounding away, putting more money into the stay-at-home, work-from-home stocks. Get rid of anything tied to the economy because the economy stinks. The economy has been picking up steam. We talked about this yesterday. Retail sales have been strong. Producer price index came in the hottest it's been in over a decade. ISM manufacturing, ISM services. I could point to lots of other things. Record high prices for lumber, high multi-year highs for the price of copper, other commodities rising. Macy's just reported today their first quarter in the black in over a year. And, companies have cut costs so much that just a little bit of uptick in the economy, that their revenues just gets magnified into the bottom line. It's just such strong operating leverage. So I want to talk to you about a couple of things. These people are still confounded by how the market went up. To me, it was easy to understand how the market could rally when we were in the worst part of the pandemic, because the stock market is a price-weighted mechanism. Bigger companies have a bigger impact on the S&P 500, which is an index. You can't invest directly into an index, but you could invest into a security that tracks your mimics an index. But the biggest companies like Amazon, Microsoft, you know the names, they actually benefited. They actually benefited from the work from home, stay at home, from the quarantine, from the social distancing. That's coming to an end, getting back to normal. We've got another COVID vaccine from Johnson & Johnson, a one-dose vaccine that could be kept just in a regular, normal refrigerator, 40 degrees or so. It doesn't 35 degrees. It doesn't have to be like super sub-zero like the Pfizer and Moderna drugs. The Pfizer drug really has to be kept ice cold. The Moderna drug, not quite as much. But logistically, one shot that could be kept in a refrigerator for, from what I understand, at least 30 days, maybe even longer, that is a pretty good logistical way to get more people jabbed. The economy is opening up, and I think we could actually see a glut of vaccines. If you want to know why, Pfizer, from the moment that it was announced that their drug for COVID, that their vaccine, I should say, for COVID, if you want to know why that stock has done nothing but go down since then, well, the news is out, and there's going to be more vaccines. There's also other vaccines in the world besides from Pfizer, Moderna, and Johnson & Johnson. There's a few others around the world. So the vaccines are coming out. We get back to normal. Even in New York City, movie theaters are going to be able to open up soon. I know, reduced capacity, but after being closed for like almost a year, come on. That is a hell of a start. And have you been tracking the airline stocks lately? So you might not appreciate this, what's going on. I'm not saying you're not an appreciative person. I'm just saying maybe you don't recognize the magnitude, the scope of what's happening. But the reflation trade is up and running. And the money is coming from the work from home, stay at home stocks, shifting into economically sensitive financials, materials, energy, industrials, consumer discretionary. That's where it's going. So let's take a look at a couple of things. And then we are going to talk about the screen share. Boom. Put myself in the bottom corner there. All right, I'm in the bottom right-hand corner, okay? You see me over here? Hello, down here. Let me make this a little bigger so you can see it. We need to go through a quick rundown on the day. This is directly tied to the topic today, but you see the Dow is down over 100 points today at one point. Up for over 400 points, up over 1%. NASDAQ up a screaming 132 points, up almost 1%. S&P up over 1%. Gold not quite catching a bid, so not really sure how to read gold, because I do believe inflation, not runaway crazy inflation, could be. I don't think it's tough to read it. I've been talking about inflation a lot. We all know inflation's coming when the economy gets back to normal and there's a surge of buying. But what we don't know is, will the inflation that comes starting now and into the second half of next year, is it transitory or is it a long-lasting, durable kind of inflation? That's what's going to determine the future of the stock market, long-term in the next year or two. Not what's happening now, okay? Right now is nice, but it's all about the inflation. Oil continues to go up $1.76 per barrel. The U.S. 10-year Treasury, okay, up to 1.3. It was up to, it was 1.4% at one point today. The high on it, you see that over there, 1.435. And at that point, people really started to get spooked because we're just getting used to 1.3. Now we're in the 1.4s, but it closed at 1.3 and change. And the VIX continues to come down to 21. These are all the things that I look at every day. So this is just such a handy chart. Snap a picture if you want. Okay. So the VIX down to 21. I'd like to see that below 20. We've been talking about that. That's the fear gauge. That is, it basically tells you that professional traders are willing to spend a little bit less to protect their portfolios, which, by the way, that's pretty bullish when professionals are using derivatives to protect their portfolios as opposed to blowing out of stock. For us, that's actually, I think, kind of bullish, kind of helpful. All right. The big news on infrastructure. This just caught my eye because this so reminds me of another era. How to play the coming infrastructure super cycle, according to Morgan Stanley. You hear that? They're calling it a super cycle. We've been talking about this coming infrastructure spend, this big build out for months now here on Be the Boss of Your Money. I know, humble brag again, but look, we've been talking about it. Okay. So just want to say, I don't know, what could I say? How about we'll say this. Oh yeah. I know, Adel, you're thinking that's so you're such a tool. I know, I got you, my editor. So we have that going on. We've got infrastructure play, but it's being now perceived that we're going to have such a strong infrastructure cycle, and literally no politician could say no to infrastructure spending. I mean, if you look at how Republicans went crazy when the pipeline was canceled, through Nebraska from Canada, people are like, how could you do that? These jobs are going to be lost. A lot of flack. So how could they say no to an infrastructure build out that it's going to create tons and tons of jobs? So, Ed Cruz, you heard him on TV. He said, how could you do that to the union workers? Like, I never knew that he was pro-union. Wow, look at that. Him and, AOC are pro-union. Go figure, okay? So you can hear the sarcasm, right? So the pipeline, was it the TL pipeline? Anyway, if there was an economic viability for the pipeline, I would be more upset. But we need oil to go up to something like 80 or 90 per barrel and stay there for Canadian oil sands to actually become economically viable. That's very impure, dirty, sulfur-packed sand, and you've got to really refine it. Crazy refining to get the to squeeze the oil out of the oil sands. It's just a very energy draining process, and it's not really economical, and it's not really feasible. I know now it's being perceived as the pipeline as a defense security thing for the country, but we have plenty of oil, right? I don't think that's the case. Okay, so let us go up. By the way, if you're out there watching this now, if you are while you're watching this, opinions, they are also welcome in the comments. So I want to keep going. All right. We took a look at this screen, super cycle infrastructure. You know what this reminds me of? This reminds me of 1992 when Clinton came in and they put a lot of money into infrastructure spending too. And that was really the thing that kicked off the 1990s bull market. The tech stocks didn't really come into play until around 95, 96 is when they first started to really heat up. It wasn't like, the first half of the decade, no one was talking about, tech stocks. And semiconductors. Yeah, there was Intel, but it wasn't like it was in the late 90s. And there was no internet yet either. Netflix hadn't gone public until I think 95 or 96. And that's kind of what sparked it off with internet stocks. All right, so let's keep going here. I want to show you the Dow 30. Look at this. Boeing was up $8. I'm sorry, it was 8%. Boeing was up $17 today, up 8%. Chevron up 3.69%. Have you heard us talking about energy, in particular Chevron? Those are some of the stocks that we talk about here as an indicator of what's happening in the energy sector. Okay. Something tells me I closed more screens than I really wanted to. All right. And then let's take a look at the Fang Stocks. Netflix up a little bit. Google up nicely, up 1%. Microsoft up a little, but Apple, Facebook, and Amazon. The market didn't get any help really from the Fang group, the biggest stocks. And it still rallied, still managed to be a good day, which goes to show you how powerful the cyclical rotation, the economic reopening trade has been. So let me see who's out there. We got a heart from Judy. And we got Ronald is out there. Andrew Cohen. Ronald, this one is for you. You ready, Ronald? Yeah, look at that. I'm using the Go Button app you told me about to get some of these fun, entertaining sound effects to give me a little zip, a little pizzazz into the show. All right, we'll put a little background music while we talk. We've got a comment out there. I knew it was you, Ron. I knew it was you. Holy plosives, Batman. Oh, I'm doing a lot of plosives. I'm a little... Watch your lip, boy. Yes. Sorry, sir. Okay. I'm a little close to the mic. Is that better? Yeah, I'm getting a little excited. All right. So let's go on. Andrew is out there. Man, I hope you guys are getting back to normal in Houston. It's a beautiful day in New York, by the way. It was like 55 degrees. I think it was like 75 today or something in Houston. The Corona stocks, Zoom down, Clorox down, Activision, Peloton, Domino's, Campbell Soup, all down. But what was up? The reopening trade. Check this out. Norwegian, up 9%. UAL, Royal Caribbean, American, Planet Fitness was like $78 like 2 or 3 weeks ago. Now it's $88. Marriott was like 120, 130. Now it's 157. That was up almost $8 today. Southwest, we've been talking about that stock since the high 30s. It's just about $60 a share. Delta, Carnival Cruise. Do you see what's happening? It is indisputable what's happening. And I think the most important story of the day is no. It's not GameStop. GameStop was up 103.94% today. Over 100% today. So just popped up at the end of the day. They had a change in executives. The CFO is out. And the Cohen, who's his last name, who started Chewy, is getting more, so it looks like he wants to get more actively involved with GameStop. And GameStop is up almost, look at that. It's up 96%. It's almost another double in aftermarket trading. So the fellow who testified in front of Congress, Deep Effin' Value is his, I think his Twitter handle, but he's got a couple of different handles, and Roaring Kitty, right? We spoke about him, and he handled himself so well in front of Congress. It was so cool because he was sitting in his game chair that he streams on at Twitch with his microphone. It was like he's streaming to Twitch, but talking to Congress. Is really cool. He said he's buying more stock, and he believes in the company very much. I hope he put his money where his mouth is, because stock's gone from 45 to 183, 188 now in aftermarket trading just today. That's crazy. But I think a bigger story today, let's see if we could get this. It's GM. All right. Just to show you how GM was up $1.79 today, 53. That's another stock we've been talking about here. So GM is another stock we've been talking about here. This is such a big, another positive. I'm going to just summarize this, then we're going to get going for the day. GM, all right. GM came out and said that they could miss their numbers by $1 billion to $2 billion a few weeks ago because of a severe shortage in semiconductor chips. Cars use up hundreds of these chips, and the more higher end the car, the more chips it uses. And, that hurt GM, it hurt Ford, and it's just, these companies are finally doing well. They're finally through these multi-decade restructurings. And now you've got this shortage in semiconductors. I was like, oh, damn. And here we are. GM comes out today. The CFO comes out and says, you know what? We actually solved the semiconductor problem. We still think we're going to meet our numbers. Everything's honky-dory. We're all back. And GM is up. And all of a sudden, this brutal semiconductor shortage. What happened? It was a disaster like 2 weeks ago. And all of a sudden, it's over. So let's take a look at some of the bullish things. Jay Powell, that's Jerome Powell, the chairman of the Federal Reserve. Second day of testifying. He testifies in front of Congress twice a year. Today was day number 2 in front of the Senate. He said that, they're really focused on unemployment, not inflation. They don't think inflation is something to worry about. He said yesterday, hey, look, we've been in lowering inflation for 25 years now. We don't think inflation just picks up out of the blue. The market clearly is worried about inflation and from a pickup in economic activity, but he's doing everything to tell you that he doesn't want to budge on short-term interest rates, but long-term rates are going up. The yield curve, the spread between short-term and long-term rates is getting wider and wider and wider. That is so good for banks, for bank stocks. That's a topic we spoke about a few weeks ago. Yield curve steepening, good for bank stocks, and you've seen what's happened, right? Bank stocks. Johnson & Johnson, their drug was recommended for approval, approved. It was recommended for the final approval, or it was approved. It was all over the news today. Whatever it is, it's on its way. And we could start seeing people getting jabbed with Johnson & Johnson's vaccine possibly in a couple of weeks. Square was, bought more Bitcoin, so Bitcoin had a recovery. We just talked about GM. After the close, Moderna said that they're already working on a booster for the South African variant, working with the NIH, National Institute of Health. So and they think they'll come out with a booster pretty quickly. You see the way the RNA vaccines work from Pfizer, Moderna, it's almost like modular, and you could pull out and put in like different sets of molecules of RNA. So they're not that hard to change. Okay, Texas. So you saw the disaster that happened in Texas. There's going to be a fortune spent in the state of Texas to upgrade their infrastructure. Okay. So they're going to spend a fortune on that. So infrastructure super cycle, we spoke about that. Reminds me of 92. And then you've got some technology things to take a look at. Non-fungible tokens, NFT. I think that could be the real deal. That's something we spoke about a few days ago. It's basically how to put your proof of your digital ownership onto a digital asset, and you could sell it to someone else, and everyone in the blockchain will see it. It's really cool technology, and you'll actually see a history of all the owners of a particular digital asset, what it last transacted for. And Mark Cuban says this is like the new internet. It's like 1995, the internet all over again. So it was a pretty optimistic day. Stocks recovered and rebounded pretty good from the drubbing they took over the last week or two. And infrastructure, again, look, I'll end it like this. If you're still asking why is the market going up, it's because you're not fully absorbing stimulus, infrastructure spending, and vaccines. Everyone who wants a vaccine for COVID, everyone will get one if they want it by the spring. Maybe mid-spring, maybe late spring, but let's say in the spring. Okay, Ron is out there. A little advice. Yeah, I did turn the level up on the go button, and it just doesn't seem to be doing the job. I might have to play with my mixer for that. And what else? Intel are so slow with research and development that Apple are making their own new M1 chips that will cost Intel market share for the first time in 20 years. True, it's really amazing. Intel was always the leader of the semiconductor pack, and AMD, Advanced Micro Devices, was always like the Me Too company. They were always trying to come up with like a generic copy or generic form of Intel chips. My, oh my, how things have turned. Now AMD is the leader, and Intel is the one who fell behind. It's really amazing how that has happened. We'll see, but everything's a cycle. Thanks so much for watching, guys, and I will see you tomorrow.